All right, boys and girls, starting the live, and give me one sec. Um, hey, Nick, or anybody from my team, can you guys confirm that you can, or Cats, can you see if you can see the live on YouTube, please?
Yeah, man, I will check now.
Thanks, appreciate it. And then we can start. Mm-mm-mm-mm.
Yeah, man, all is clear. Camera and video is going on.
Thanks.
By sorry for my voice, I have a flu.
No worries, no worries. All right, guys. Thanks a lot. I'm gonna, yeah, please, all right, never mind. I'm going live. Let's see. All good. All right. So we're gonna have a cash market open in about 3 minutes. So what usually happens is futures markets trade 24/6, and they don't only, unlike Bitcoin that trades 24/7. Futures markets are closed obviously on Saturday, and then they reopen at 5 p.m. New York time on Sunday. So but the underlying indices, for example, like ES is S&P Mini, NQ is the Nasdaq, YM is the Dow, etc. So the cash markets of these that are trading like in New York, they open up at 9:30 till 4 p.m. All right, they are regular. So we're gonna see a spike of orders volume usually occur when it happens. And so we're gonna wait for the open exactly 2 minutes. So let's see what happens in 1 minute, and then we can start doing what we're doing. Let's see if we can do the level 2 here. One sec. Move this away. Let's quick search. One more minute. 2 more minutes actually, and then we can rock and roll. All right, almost there. As you can see, some volatility seeping through prior to the um, open. In 1 minute, we're gonna get an open. Then we can see, and I'll show you how I do analysis from top to bottom in order for you to determine what the hell to do during the day. Okay, let me remove this and clean this up. This is all old stuff. There we go. Now we're getting the open, and we're off to the races in the cash market. So now you can be trading stocks, the regular stocks on the stock market in New York. So we just had our open, right? So obviously you don't this the way you make decisions in any of the trading. I prefer to do the top bottom analysis. What's the top bottom analysis? So you start with a weekly chart. You want to see the trend where this is where everything is going. You want to mark. Can you mute your mics? One sec, guys. I'm also on Discord, so I'm gonna have to do some management. All right, so we can obviously see that the all stock markets, if we're trading stock markets, they've been going in. We've been in an uptrend, and all of this was priced in or happening because of the Trump effect. Basically, you have first analyze what kind of a fundamental environment you're in, and with Trump being a president for deregulation and business friendly, this is why the markets have been one of the reasons why markets have been pricing in, and after the basically that's why they've been rallying in the last couple of weeks. So with bigger picture in mind, obviously the money printing and markets always going up is the biggest winner with the inflation and everything. So when your dollar gets devalued, the all other underlying assets get. One second, guys. Can you mute your mic, please? All right. Every one sec. So with all the money printing, all the asset prices will naturally go up, like real estate, stocks, or even watches and cars, right? That's what happened in the last 4-5 years during COVID, since COVID, and but regardless. So you start with to analyze technically. The S&P Mini is approaching its all-time high. So do you want to? You go on a daily chart. You want to mark immediate tops and bottoms. Okay, so this was the all-time high. And the reason why you mark it is because you want to see how much room there is left to it, because it would be very silly to put a buy order all the way up at this resistance, because it can easily roll over. If you want to be a buyer, either wait for the pullback somewhere or wait for it to break out and then retest and continue onwards. That's how you trade. And the rookie mistake is they don't mark these big levels and they get in trouble, right? So another obviously big level will be here. The low in this consolidation, this was the all-time high top on S&P Mini, S&P 500, the stock index in the United States. I'm jumping through different levels of trading here because I don't know who is at what level. So I'm just giving you from the beginning to more intermediate stuff. So you mark the top of all-time high. You mark this. Obviously, we're not going to get here to this day, but you should have it on your chart. All right. So then you drill down further down. You can see that we had big candlesticks like this. A lot of volume coming in. And as we're approaching this all-time high, do you see that this the rally is kind of running out of steam, right? So what do most traders that are novice, what do they do? They try to fade this. They try to sell it. It might not be the worst idea because we're very close to here, but your stop losses will have to be above all-time high. But a more probable trade would be waiting for a pullback and betting and going with the trend. If the trend is up, then shorting, you should be patient enough to wait and for the opportunities to go with the trend instead of pissing against the trend. Now, you can do fading moves. You can do mean reversion trading as well. But, a lot of you thinking right now, oh, this is a very good area to short, and maybe you'll catch a little bit of a pullback. But when you're going to take 100 of these trades, you're going to see that out of 100 trades, you're not going to be profitable, okay? Because you're pissing against the wind. And if you're a novice trader or even early intermediary trader, you shouldn't be pissing against the wind. Rather than you should be more geared toward trading with the trend because it's just easier, right? Imagine there's a river, a flow, an order flow, right? Isn't it easier to swim with the river flow instead of pissing against it? So whenever you're fighting the market, that's when you sweat, that's when you lose money, that's when you can't sleep, that's when everything of this nature happens. When you actually go with the flow, it's a lot easier. You swim easier, it's faster, it's less headache, correct? Right. So self-explanatory. So you mark the big areas up from the weekly. Then you do the same thing for on the shorter time frames. So this was a pretty big level. I usually mark these type of levels from the week to to the candle body because that's where the order bunch of, see, this is exactly why it peaked out here. So there's something going on in this area that provides multiple levels of resistances. Okay, and this is the reason why prices got closed specifically at this previous peaks high. Okay, so if I want to buy, something. I'm not going to be chasing it up here. I don't want to sell it because the FOMO is strong. Imagine we all have seen what happened with Bitcoin, correct? Imagine you were trying to short Bitcoin when it was at 10,000, 20, 30, 40, 50, 60, et cetera, et cetera, et cetera, right? Isn't it easier to just let it do its work? Same thing here. The stock market is rallying right now. Pick the top, pick the bottom is the most unprofessional thing you can do. All right, that it sure makes for the good news. It makes for the juicy stories, right? I pick the top, pick the bottom. Then they make movies about you, like Big Short and all that jazz. But most of the time, that shit don't work. Okay. So you'll make a lot more money and you will live in a lot less agony as a trader if you will just be patient enough to wait for major areas of interest and then see if the price turns around. So this is a 55 EMA. As you can see, price likes to respect it. And you can see that this 55 EMA coincides now with this area of interest, okay? So if I'm going to be a buyer of the S&Ps, E-minis, or you can do the same analysis on the cash market if you want. This is generally applicable to everything. I would want to be looking for a confluence. This is what's called a confluence, right? You have a confluence of different indicators showing that this area might provide at least potentially an area where a good entry should be occurring. This is how you identify your entry to go with the trend. Obviously, you just don't leave an order here. You want to see, you drill down to shorter time frame, you leave an alert. When the price gets to this level, obviously I'm at the computer desk and I'm watching, but if you're not at the computer desk, you're not watching, you don't want to watch it. You can leave an alert and come back to it when something occurs, because we're gonna be looking at a lot of different instruments and identifying these key levels of interest. Again, this is my trading style. Some people trade on 1 minute chart. They want to do in and out, in and out, in and out. That's that's how they trade. I'm sharing my style of trading. All right. So when the price gets to this level, and obviously you can, if you're a fan of ICT, here's your order block, ICT order block right here on a 1 hour time frame. This right. So again, you get this confluence of interest. With various trading styles, smart money concepts, this, that. They all describe pretty much same phenomenon, just in different languages, and they all try to outshine each other. But in reality, first of all, it doesn't matter as long as you make money. Second of all, they all have, they pretty much, like I said, they describe similar things in different languages, and then they try to sell you courses, So, but in reality, it's the same thing, or very similar at least. All right. So anyway, so now I'm not going to be interested for a potential swing trade unless I'm at some kind of level. And this is what it takes. I'm not going to be taking a trade just because it's a Wednesday and it's 9:40 in the morning and I need to just do some trading. No, I'm going to look for interesting opportunities. And this is not interesting to me right now because fading here makes very little sense to me, because it can still grind and stop you out, okay? It can grind exactly to the top, pop its head up from all-time high to stop all the shorts, and then reverse. So why am I going to short here if I can short here? There's no confirmation on shorting as well, So far, this is still grinding up. Okay, when we're gonna have a change of structure, that's when you're gonna be looking for shorts, not when you just think that this is the top. all right, arbitrarily. So when it gets to this level, I'm gonna be on a 5 minute or a 15 minute, and I'm gonna be looking for signs of some kind of turnaround. Okay, so when we get to this level, you can see this previous the 1 hour order block in this form right here, and once it gets to this to the highlighted zone, I will be looking for a turnaround. So if we have some kind of candlestick with a probe below the support here, right, and then a big wick with a hammer candle, and then continuation, that's when you can easily buy the continuation with the C, and now you know your stop loss here. Okay, so I don't see anything interesting right now in ES for me personally, because we are approaching, like I said, a daily all-time high, and you don't want to be buying into a strong resistance like that. Okay, because if you look at the previous time, sometimes it just blows through it like this, right? But sometimes it, like here, you can see that it got to it and then reversed. And in that day, that one day that it did reverse, this was a, you could have stopped you out. All right, so you were sitting through pain. So again, it's easier to find an area of interest and join the trend rather than sell into heavy resistance. So for the S&P 500, I'm definitely just going to be chilling and wait for the price action to get to my place of interest. You also want to check what the bonds and interest rates are doing. Okay, so this will give you clues to what to do with the currencies. So U.S. dollar is should you be buying or should you not be buying? Should you be selling? So right now the 10-year has been decreasing in the last since a week ago, or not a week ago, about a week ago. So we've been selling for a few days. The yield is dropping, so U.S. dollar is wonky, and you can see it in the euro dollar that the euro dollar started going up. Same thing with pound. In the last, these are daily charts in the last week, and this is, by the way, where I'm looking for a potential sell for the pound because this is going to be the previous. This is my area of interest with the deep fib pullback, and if once I see it started rolling over on a short-term time frame, I'm gonna be looking for shorts here. So 1 sec. But that's forex. Let's hop on gold. 1 sec. So same thing with gold. See, the gold is at the all-time high. I traded gold long up until yesterday, and I closed my longs positions from here to here. This is where I traded. So these were my trades because now as we approach this resistance, it started wobbling about. I decided to close it. We're not that far from all-time high. I'd rather catch another dip. Okay, so another dip will be again. This is right now we're moving up. I bought this dip. I bought this dip, intraday or more like a small swing trade. So I held it for a day or two. All right. So this is a perfect turnaround sign, right? So you see a 55 EMA with indecision, and then continuation. So you put your stop here. You enter someone along here. You take your partial around top, et cetera, et cetera, et cetera. Same thing here. A hammer candle. Boom. You can go long. Right now, there's nothing setting up. You have to wait for the dip. Buy the dip. That's why it's called buy the fucking dip, right? It's not for you to just be a mindless monkey that smashes, pardon me, buy and sell buttons. It's more of you have to be patient to have the patience to sit and do nothing on your hands. And only when those your type of setups set up, that's when you enter those setups. And I've been trading long enough to being beaten like a rented mule, specifically. So I know when to enter, not to enter just willy nilly. Be patient. So a deep pullback like that, once I start seeing in this general area um, the turnaround, I might join the market, right? But I need to see the signs of the turnaround, like nice reversal pattern forming, okay, and momentum coming in into another side. If you want to get super granular and see what's happening on the order flow, you can always switch to one sec, volume profile. All right, let's see. And it will give you granular detail of what's happening in each and every candle, okay? Who's winning, who's losing, these are, all right? And that's the beauty of trading futures. If you really want to see the insight of what's happening, and these are all statistics, order statistics that are traded on the exchanges. And this gold futures are traded on COMEX in Chicago. Others trade on CBOEs and etc. They are all central exchanges. So if you want to trade futures, you will have to. Everybody has to trade on one exchange. So all the data from the exchange is available to everybody. Who bought, who sold, how much, and when. Okay, you can see all this data if it helps you, and you can see on each level of price how many orders are filled. So here you can see that the point of control, this area, this is the most interest in this price. If you want to get to, if you really want to day trade and it's still ongoing. But here you can see that obviously it's still a 5-minute chart that is still being traded. And we're getting positive deltas, meaning there's more buyers than sellers, and that's why the price is coming in. And you can see how many contracts were sold and how many contracts were bought and who won at the end of the day, right? At the end of let me just make it a little larger. So you can see that there were 200 more contracts, 280 more buyers than sellers, and obviously that's reflected in the price. And that's how you want to spot turnarounds, all right? So you want to see that the prices come to some kind of support, and if, let's say, you want to go long, you want to see that the price is continuing upwards. And this is if you want to be trading on a 5 or 1 minute chart. Unfortunately, I'm running multiple companies, so I cannot be trading 1 or 5 minute chart because it requires absolute focus, okay? But this is what's available when you trade futures. You get data which will help you as a small retail trader to level the playing field at least a little bit against the big guys, okay? Because you can see what the big guys are doing. Let's see, volume. You can also see the volume profile. This is the accurate volume, not the bullshit your broker shows you in Forex, right? Forex is decentralized, so you don't see the volume as granular as you do here. So now what does it do? How does it help you? So now you can see that this was the turnaround point, right? With the candle, with this candle of the wick, and this was the red area is marked the support area from higher time frames, and you can see that this candle formed a hammer. You can see it and then you also see a positive delta occurring at this level. So this is not just fake bullshit. You can see that there are more buyers than sellers. You can easily buy right after that point when the price takes out this candle high. Your stop loss goes below here, and you already have 2 to 1 here as a day trade. You should be done, and this is why it's being sold right now, because literally 1, 2, and now people are taking profit. This was a scalp. This is day trading. All right. And so now what would be the next opportunity? Again, so you have to go to higher time frames. I'm going to, because I'm streaming to on multiple platforms, it's a little slow, but let me go to a normal candlestick analysis. 1 second. Where's my cloud? All right, so let me turn off the VVP, VRVP. There we go. So another interesting aspect, if you go on the higher time frame, how right now we are consolidating on top of this area. So you can easily, if you want to do a day trade again on a higher time frame, again it's offering you an opportunity to wait for this hourly candle to close. You can see that we've probed the support twice on this on hourly candlesticks, and previous resistance is now turning support to serve as a launch pad for another leg up. Okay, so we can wait for a little more consolidation for the moving averages to catch up, kind of like we did here. See, caught up. Well, here it went. It did. It still was a consolidation and another leg up, but again, not everything will work out ideally every single time. But you can see that you have 3 candles at this point that are try to be red. At some point, they were all red candles, right? Meaning sellers were dominating, and buyers are coming in. So, and it's consolidating now on top of a large level that previously served as resistance. So now it's turning support. So it's literally the price action. This is what's called reading the price action. It's telling you that the buyers are sitting here. They're hitting they're sitting on a bid. All right, they're bidding up this market. So you don't have to enter right away. But if you want to take a swing trade, not a swing trade, but a day short day trade, wait for this hourly candle to close in 7 minutes. You put your stop below these levels. Even better would be probably below support. All right, to give you extra juice. And now you see that you can have 1 to 0.2 till daily ATR. Daily ATR, these 2 levels here. I like them. This is what a usual movement in 1 day this instrument does. Basically, it marks the area. Some instruments move 10 points a day. Some instruments move 20 points a day. But it basically says that usually for a typical in the last 2 weeks, the typical range was this. So I don't want to be pushing it much further than that, because sometimes it does, sometimes it doesn't. But then you also see that the all-time high is right there. So in 7 minutes, in 6 minutes, when it's the end of the hour and the new candle opens up, if it takes out the top of this candle, I can see that the buyers are coming in. We can go long and essentially put our stops right here, and then let it either work out or not work out. But that's already more interesting than the ES, for example, right? Which is far away from our point of interest, and it just keeps on rolling. So basically, in the case of S&P, 1 second. If you weren't on this train, then if it's basically there's no point in. And by the way, you can see that. Some people were trying to short because we're approaching all-time highs, and it's still grinding up higher, as like I said. Even though it looked like it was 15 minutes ago, it looked like a down candle, right? So complete turnaround. So because again took out this candle's low, and impatient traders got short, and now they're trapped. They just got stopped out. All right. If you're on the 5-minute time frame, see on the 5-minute time frame, it started turning around, and then etc. So for me here, I'm not really interested in joining this rally anymore, even though, again, you had 2 railroad tracks with the 55 EMA serving as support here. It's still going up, but that's way too over. That's not a high probability trade for me. Like I said, I'm I prefer to have bigger areas of interest to serve as reactions, and you can see that we broke out just like in gold the area of interest. We broke out, we retested it, and then we went up. So this was the point where you would be looking to ascertain if the price is continuing back up. So same thing, let me show you, with gold is happening with gold. See, it's consolidating on top. So I want to see if we continue upwards now. But I have to wait for this candle to close. As you can see, they're still battling about. And we can actually dive in and see who's doing what using volume footprint charts. One second. Okay, so as you can see, the sellers are dominating here, not buyers. All right. So this is the beauty. Even though this was a wick, a candlestick that looks bullish, in reality it's still bearish. And you can see internals of the price action using futures, which you won't be able to see in the forex markets. So you can see right now that the sellers are still are dominating. So why am I gonna join this? Why am I gonna be a buyer when I see that the buyers are still not there? There's way too many sellers trying to. Again, we have to wait for this candle to close in 3 minutes. But I'm not gonna be joining a buy side when I don't have a big. We don't have big whales trying to buy this market, you know? So it's the whales trying to sell the market. 1 second, I'm gonna meet somebody. All right. Let's wait another 2 minutes. And again, I'll keep talking and talking and talking, and to keep it interesting. But in reality, trading is a boring sport. It's not. If you're excited and if you're jazzed up, it usually means you are in an emotional state, and it's not an emotional game. This is sit on your hands and do nothing, observe, 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 until it's time to do something, to act, right? So we're waiting. And as you can see, people who rushed when this candle was all the way up there, who didn't wait for the candle to close, are now getting in trouble. They're now trying to sweat because this candle looked like a hammer candle, right? It looked like this. It looked like this candle right here. Only 10 minutes ago. So we have to wait for candle close to start seeing if the buyers will be coming in and join the market or not. And look at this top candle right here. Again, you can see that it's a green candle, but there were more sellers than buyers, and then a little follow through to the bottom, right? Again, if you want to trade on a short time frame, okay, so very neutral. Let's see what develops now. Definitely, sellers are dominating still. I'm not interested in going long until I see buyers get back into this market. And again, it's not something I can control. This is something you have to literally let market show you and develop, and let the price action develop. 1 second, I'm gonna do this. Where's this thing? Waiting still. There's nothing to do. So again, I know everybody thinks that trading is shooting, or at all directions, and it's super exciting. But when there's nothing to that has set up, it's your job not to get into the market, because when you're gonna get into the market, you're gonna get in trouble. When you're getting in trouble, you're gonna start losing money. And in this business, this business literally is about making money, not action. If you want action, go to Vegas. But yes, see, you can see that all hourly candles, aside from this one, we're still being dominated by sellers. You can see the internals. And honestly, so I don't see any. I will have to wait until if until this picture changes, if it changes, or it just finally takes the support and goes lower, right? So why am I gonna put my capital at risk until the market literally tells me like a fucking, hey dummy, now it's time to go long. So I'm gonna be okay, all right, I'm gonna go long. It's very fucking simple when you know what the fuck you're doing. And the hardest thing in trading is to learn when not to trade. All right, and that takes journaling. I gave a whole spiel about journaling yesterday, basically for that reason, you know, because you need to develop your strategies and your understanding, and you're only gonna see it once you have data, and when you entered, why you entered, how did it close, how did it play out, what were your expectations, were the expectations met or not, right? And after you see 50 trades that you thought, oh, this is gonna go that way, and then you see 50 times that it didn't go that way, it went the other way, you're like, oh shit, maybe I shouldn't take this trade. Same thing on the plus side. When you see when you see the when you have 50, 100 trades, and you're gonna start seeing patterns of shit that doesn't work and shit that does work. All right, and that's when you should. That's when you're gonna determine what to take and what not to take, and that's how you hone your trading abilities. All right, you have to go through this process of thousands of trades. Obviously, it's very hard to do thousands, but at least have 50, 100 under your belt, and you're gonna start seeing what works, what doesn't work, and you do micro adjustments until a year of doing this, of 2 years of doing this, you're gonna find something that works majority of the time, enough times, let's put it that way, for you to make substantial amount of money. And then you scale that amount of money. That's all you do. Once you have the setup, once you see that it works time and time again. Okay? So right now, who's dominating? Sellers are dominating. Is it time to buy? Not yet. The market, the price action has not told us that we should be buyers just yet. Okay? So I have to see if something else is happening. Let's see oil. Pardon me. Let's see. CO. See. All right. So, the oil is traded on NYMEX, New York Mercantile Exchange. All right. Same thing. You have all the data, all the players. You see all the volume, who bought what, where, at what price, just like the institutional players, okay? In Forex markets, this is not available. All right, let's see what's oil. So first of all, you know, if I want to zoom out and just see what pockets of interest are, how do you read this volume profile? You can see pockets of great interest, right? Well, not only that, you can see where pockets are low volume. This is where, if you're gonna be, you see that the market is selling. You want to be a seller into these pockets of no volume, essentially. So when the price came back up here, you can see that there's no big interest. The interest is all the way up here. So when it starts rolling over here, you know that this is a good area to sell, and then into the next. This is the next area of support. This is where you should be closing your trade. Okay, you can take a half off, obviously, at this low, but you should probably definitely, if you short it right here, to close it right here. it obviously coincides with this little pocket of action as well. So you have confluence of, or this is an ICT order block. If you again, it's all the same shit, but you have wait. So, guys, one second, I mute people joining our Discord. So again, you this gives you clues where to take profit and where to sell, and not a lot of things. You won't be. It's a lot easier to do on futures markets, at least using these techniques, than on forex markets. So that's why there are advantages to trading futures. Okay, so let me go to the normal candlesticks. Again, very low volatility. There's not really happening, and that's something you cannot force. Some days are just not as volatile because all the excitement was prior to the inauguration and prior to Donald Trump taking office, and then all of his basically talk. All of his talk trying to relate to the markets his new policies, and markets are pricing in his policies. But right now, there's no news on the wires. There's not much going on, and you can see that the volatility is kind of it's very small and non-existent compared to these candles right here. You can see that this is just kind of anemic, and when it's anemic, maybe it's a good way to stay out of the market or not do anything, because literally there's no big movers that are happening that you can say, oh, this is happening, let's join that side, and the price action confirms that notion. Okay, so the only thing right now, let's take a look at gold. What the hell is gold doing still? Again, we're not doing a whole lot of anything. In fact, we're oops, a sec. We are rolling over. See, this at literally 20 minutes ago, this looked bullish. People who were impatient, they joined. They went long instead of being patient, and they're underwater now, sweating balls. What's the point of doing that if you can just sit on the sidelines? Because sitting on the sidelines is cheap. It's free, being a cowboy and impatient dummy costs money. That actually rhymes. Impatient dummy costs money. Goddamn lyrical genius. All right. So again, your job is just to sit and observe. When this picture changes, for me, this is what I would be interested in doing with the gold today. Otherwise, for now, the markets are slow today. I cannot force markets to be super active when they're not. It's a day for to do your. It's just some days are very fast, and you can take 5 trades, and things are happening, and sometimes it's slow, and all you can do is just sit on your hands. It is what it is. Now, you can't force markets. All right, let's take a look at the euro futures. And again, now, if you want to trade currencies, was also interesting. You can, one second, let me go back. You can obviously see the volume profile as well, footprint of each candle, because it's all traded on CME, on Chicago Mercantile Exchange. And the price pretty much moves like the Forex. It's just a small representation of a Forex market, but you can see internals of the price action. So let me just go to a normal technical analysis. I want to see the daily. The daily has been selling off for quite some time. We're doing a little bit of a pullback, and we're coming into some resistance. Okay, so today daily, you can see yesterday was a pump, and today this is an anemic price action again. See, there's no little volatility with the price in the middle. That means that this is a balanced market. That means buyers and sellers, nobody has particular interest to hop on, and there's no clear sign who's winning, who's losing. This is obviously a daily candle for now. So I'm not really looking to. There's nothing that jumps out at me for me to hop on some kind of trade. So you have to, again, looks boring, and that has to be, and trading is a boring sport. You just look for opportunities. Look for opportunities. Once you see a good opportunity, that's when you take it. And most people have wrong expectations for trading. They want to trade without they just want the action. But this is not a casino. If you're gonna treat it like a casino, you're gonna have the results of a casino. And I don't mean you owning the one. It's mostly people losing money, right? So, all right. So this is euro. Let's go back to. We can take a look at pound. 6B. Pound is interesting. They're actually in deep trouble. This is a weekly chart, been selling off with a few weeks of worth of pullbacks. We're now doing another pullback, and I want to see once we reach this moving average cloud area. The moving averages basically just calculate. It's showing you a value area where you should be selling. That's all it is. Okay, to put it in simple terms. So somewhere around here, once it starts seeing some kind of turnaround, I definitely want to reshort the pound. Okay, if it happens. Again, I need the price action to confirm me that it's happening, not just just blindly jump in. So you can see here, for example, lots of indecision, and finally a sell-off. You sell at the once the low of this candle is taken out, your stop loss here 1 to 1, 1 to 2, whatever the fuck you want to do. Same thing here, pull back into previous area, and the value area obviously outlined by the moving average cloud, reversal pattern, and once the low is taken out, stop loss here, bon voyage. Okay, so I want to see some kind of pattern here. Obviously, I'm not. This is just a daily chart, but I would want to. I would jump on lower time frames to see the turnaround happen. But as just to simply show you that you have to be patient, and then you get those opportunities. You always get them. But your job as a trader is to sit on your hands and wait for these opportunities. And most people don't have the fucking patience because they want to just smash that button. So, and that's the result you guys get. You get smashed yourselves. All right. So let's see what's happening with our dear gold. Little volatility today. Unfortunately. So this is now again an indecision candle. Buyers are trying to step in, which is a good sign. Let's see. Again, deceiving. See, buyers are trying to step in, but who's winning? Shorts are winning. Okay, shorts are still winning. So until that picture changes, I ain't doing shit. So this is a beautiful example. Today is a beautiful example why utilizing volume footprint charts, you can see internals of what's happening behind each candle, and actually hop on those candles when the picture changes, right? So, and as much as I want to get into the action and do something, until this picture changes, there's nothing to do. Anyway, I want to say we're running a 40% discount right now for all the for fundingfutures.com. This is what you're able to do trading futures, and I will be doing these things live for the next at least this week. Next week I will be doing trading live. Okay, So be sure to join me tomorrow. I'll probably start around 9:30, and at the end, one second, gonna mute people, and if this picture changes today, I'm gonna post on Discord. So make sure you join Funding Futures Discord. If you're watching this on YouTube, you can get the link in the description, and I will post once this picture changes. If it changes to the positive side for buying side today, I will tell you I'm entering longs on gold, and I'll take a screenshot of what's happening. All right. On this beautiful note, I'll see you tomorrow, and I'll see you Friday as well. So be sure to join us if you want to learn. If you found this educational, and you think that you can help us make money by you making money, then join fundingfutures.com. Cheers.